Australian dollar continues to fight. This is Chris Lewis from FXEmpire taking a look at the Australian dollar. You can see that we have been hanging around the 0.66 level, an area that has been resistance previously, and therefore it does make a lot of sense that we will continue to look at this as a bit of a fulcrum for price. Underneath, we have the 200-day EMA that could come into the picture to offer support. If we rally from here, then we have the shooting star that formed on Friday that forms resistance all the way to the 0.6675 level. At this point, I think we're waiting to see what the CPI numbers will be and whether or not they show signs of inflation in the United States. A short-term pullback does make a certain amount of sense, as we would go in the middle of the consolidation range. The 0.65 level underneath is an area that I think offers quite a bit of support. In general, I think we have to look at this as a scenario that we're probably more supported than resisted, but that CPI number can change things quite rapidly. If we do break out to the upside, we could go looking all the way to the 0.69 level, but keep in mind that the Australian dollar needs more of a risk-on type appetite around the world. So we'll see how that plays out. You also have to pay attention to Asia and what commodities are doing in general. Underneath, if we were to break the 0.65 level, it opens up a move down to 0.6450. Currently, people are paying more attention to the fact that the Federal Reserve is going to cut rates later this year than anything else. So, at this point, it certainly looks like people are willing to at least support this currency. If you enjoyed the video, give me a thumbs up and subscribe.